Hello everyone. So we are back with another revision video on AS-28 impairment of assets. So as we go ahead with other revision classes as well, this one we will first revise the concepts. In between I'll also mix it with sums so that it won't be full of theory. Okay, so it will be a mix of theory points revision then sums practice. So let's get started. So first, before getting into the standard, let me tell you one basic principle of accountancy. Okay, please remember this. This is a basic principle that is applied in almost all the standards relating to assets. What accountancy says is, in a balance sheet, when you are showing an asset, okay, whenever an asset is shown in the balance sheet, accountancy says that that asset should not be shown at a value that is more than what it can recover. In other words, you should also see what you can recover from this asset in the future, and that is the maximum value that you can show in the balance sheet. Beyond that you cannot show. So accountancy is trying to tell that for every asset, see what is its cost, see how much you can recover in future from that. In these two, whichever is less, that only should come in the balance sheet. This is applicable for all the assets. Many of them will think that impairment as a concept is applicable only for PPE intangibles. No, that is a very narrow perspective. Impairment is applicable for all the assets. Sir, inventory law impairment applicable, sir? Yes, but not in AS-28. There is a particular provision in AS-2 itself. Whatever you learnt as cost or NRV, whichever is less, that is nothing but impairment of inventory. Whatever provision for doubtful debts that you would have learnt in your foundation is nothing but provision for impairment on debtors. Whatever in AS-13 that you have learnt for current investments, cost or fair value, whichever is less, that is also an impairment provision for investments. Even there is an impairment provision for DTA in AS-22 also. Similarly, for PPE and intangibles, impairment provisions are given in a specific standard called as AS-28. Okay, so with this background, let's get into this standard. Remember, an asset cannot be shown in the balance sheet at a value which is more than what you can recover from that asset in the future. Okay, you cannot show it more than that. With this background, let's get into the standard. Okay, so what AS-28 says is, should you check for impairment every year? Is it necessary that every year I should calculate recoverable amount, compare that with carrying amount, then whichever is less only will come in balance sheet, remaining will be charged as impairment loss to P&L. Is it necessary for me to do this impairment testing every year? In that case, AS-28 says, no, it is not necessary to do impairment testing every year. It is enough if we do impairment testing in the year in which there are indicators of impairment. Sorry. Basically, if there is something wrong with the asset, if there is some indication that there is something negative in respect of the asset, that means there is an indication that asset's value should have reduced. In that case, you have to put the asset to impairment test, estimate the recoverable amount of this asset, compare that with carrying amount of the asset, whichever is less only will come in the balance sheet, remaining will be charged as impairment loss to P&L. So we should only do this impairment testing whenever there are indicators. In class we would have discussed the theory, internal indicators and external indicators. Only when those indicators are present we have to apply AS-28, otherwise AS-28 should not be applied. Sir, now what is carrying amount? Very, very simple. It is original cost minus accumulated depreciation. So whatever after subtracting depreciation, whatever you get, that WDV or book value or carrying amount, that will be compared with recoverable amount. Sir, what is this recoverable amount? AS-28 says recoverable amount is value in use or NSP, whichever is higher. Remember, whichever is higher, value in use or NSP, whichever is higher. Sir, what is this? To give you a simple background, value in use is nothing but present value of the future cash inflows that you can generate from this asset minus present value of future cash outflows that are necessary to generate the inflows. I am repeating, value in use is equal to present value of cash inflows from use plus present value of cash inflows from sale minus present value of cash outflows from use. Okay, see, basically whenever you have an asset, assume you have a plant and machinery. How you can recover, or how you can get benefits from that plant and machinery? You can get in two ways. One, you can use that plant and machinery till the end of its useful life, use it to produce the products, sell those products and make money. So whatever money or whatever inflow that you get from sale of products, that only I am calling it as present value of cash inflows from use. And at the end of useful life, you will sell this asset, you will get that scrap value, that is only called as present value of cash inflows from sale. Now, to produce products, you will incur some cost, material cost, labor cost. Those are cash outflows. Those cash outflows should be subtracted. And remember, all these should be present valued because these will come in the future. That present value is called as value in use. Okay. Sir, is there any other way to make money from this plant and machinery? Yes, you can immediately sell also and make money. That is only called as NSP. NSP is equal to selling price minus cost of disposal. Okay, this is only called as net selling price, which is nothing but selling price minus cost of disposal. This NSP or value in use, whichever is higher, that is only called as recoverable amount. That will be compared with carrying amount. If carrying amount itself is lower, then no problem, no impairment loss. But if carrying amount is higher and recoverable amount is lower, then the difference will be charged as impairment loss to P&L, provided cost model is followed. Okay, now this is how you calculate the impairment loss. Sir, I have calculated this impairment loss. Now what should I do with this impairment loss? Where should I charge this impairment loss? This standard says, AS-28 says, if it is a normal asset where you are following cost model, then this entire impairment loss should be charged to P&L. If you are following cost model as per AS-10, charge the impairment loss to P&L. However, if you are following revaluation model, then this impairment loss should be first adjusted against revaluation reserve. Then if there is still any extra loss, that extra loss will be taken to P&L. Okay, this is clear. So if you are following revaluation model, to the extent revaluation reserve is available, that impairment loss should be charged to revaluation reserve. Extra impairment loss only should be taken to P&L. So to the extent revaluation reserve is available, charge this impairment loss against revaluation reserve. Extra impairment loss will be charged to P&L. This is how you have to do if you are following a revaluation model. Okay, sir, okay, I understood, sir. I am charging this impairment loss. In future, is it possible to reverse the impairment loss that is charged? Yes, you can reverse the impairment loss that is charged to P&L. Sorry, you can reverse the impairment loss, but AS-28 says to reverse impairment loss, there should be indicators of reversal. Like how to charge impairment loss, AS-28 is asking for indicators. Same way, to reverse that impairment loss that was charged in the earlier AS also, AS-28 is telling, I need indicators. We are asking AS-28 what indicators you want. Basically, these indicators of reversal of impairment loss are opposite to the indicators of impairment loss. Impairment loss ke sila indicators irka, internal, external, basically, adellame negative irukkum. Adukku opposite, all positive indicators if we have, those are called as indicators of reversal of impairment loss. If there are such indicators in any particular year, then you can reverse the impairment loss. Then you can reverse the impairment loss. Able to understand this? Impairment loss can be reversed only in the year in which there are indicators of reversal of impairment loss. Sir, now I have indicators of reversal of impairment loss, sir. In that case, what I should do? Remember, listen to this carefully. Let me explain this important point, very, very important point through an example. Okay. Let us assume we have purchased an asset for 100 rupees and useful life is 10 years. Residual value 0 and they are following SLM, straight line method. Okay. In that case, depreciation will be how much? 100 by 10 is equal to 10. 10 will be the depreciation. First year end book value or carrying amount will be 100 minus 10, 90. Correct? Now assume there are indicators of impairment. So I am putting this asset to impairment test. When I calculate the recoverable amount, it is coming only to 72. Sir, how did you calculate this recoverable amount, sir? It is nothing but higher of value in use and NSP. So it is coming to how much? 72. Now listen to this carefully. 72 is the recoverable amount. Carrying amount is 90. So recoverable amount is less than carrying amount. So there will be an impairment loss of 90 minus 72, which is 18. 18 is the impairment loss. Assume I am following only cost model. So I will charge this to P&L. Okay. So this is how you will do in the first year. Now second year we have to charge depreciation. Sir, how will you calculate depreciation now? What is the revised carrying amount? 70 after charging impairment loss. How many remaining years we have? 9 years. So from second year, every year we will be charging 8 as depreciation. So second year, 72 minus 8 depreciation, 64 will be the book value. Third year, again another 8 we will charge. So third year end, 56 will become the book value. Now assume third year end, we have indicators of reversal of impairment. What happened third year end? There are indicators of reversal of impairment. So again we have to go and estimate the recoverable amount. Assume recoverable amount is 72. How much is the recoverable amount? 72. Okay. Or let us keep it as, let us keep the recoverable amount as 74. Okay. Now you are estimating the recoverable amount. It is coming to how much? 74. Now what most of them will think is, sir, carrying amount 56, recoverable amount 74, sir. So 18 I can reverse, sir, because previously I charged 18 as loss. Now I'll reverse that 18 as loss. If you do like that, AS-28 says it is wrong. AS-28 says it is wrong. Okay. So what AS-28 says is, whenever you are reversing the impairment loss, after reversal of impairment loss, carrying amount of the asset should not be greater than carrying amount had there been no impairment. So enna solla varana, see, when you charge impairment loss, the value of the asset will reduce. Same way, when you are reversing the impairment loss, the value of the asset will increase. First, this is a very, very basic point which you should understand. Impairment charge பண்ணும்போது asset value குறையும். Impairment loss reverse பண்ணும்போது asset value ஏறும். First, this is the point that you should be very, very clear. Now, what AS-28 is telling, okay, I will allow you to increase. You increase. But after increasing, the revised carrying amount of that asset should not be more than the carrying amount had there been no impairment loss. Impairment loss illana enna carrying amount irundirukumo adha taandi pokudada. Appana enna sir, ipo I purchased this initially at 100. If there is no impairment loss, every year depreciation will be 10. 3 years over 10 into 3, 30 depreciation. So 100 minus 30, carrying amount will be 70. So AS-28 says, if you are reversing the impairment loss, the carrying amount should not go beyond 70. That means from 56, maximum I can take it only till 70. So 14 is only the impairment loss that can be reversed. So remember this, a very important point. Okay. So after reversal of impairment loss, carrying amount of the asset should not go beyond the carrying amount had there been no impairment loss. A very, very important point. Okay. Please ensure you remember this. So at the time of charging impairment loss, if you're following cost model, charge that impairment loss to P&L. If you're following revaluation model, then that impairment loss should be charged to revaluation reserve. Excess impairment loss can be taken to P&L. At the time of reversal, if you are following cost model, reversal of impairment loss will be credited to P&L. If you are following revaluation model, first you will increase the revaluation reserve. Any extra reversal will be credited to P&L. Okay. So impairment loss is a loss. Reversal of impairment loss is a gain in P&L. So ensure that you are very clear with this point. Okay. Now before going to the next concepts, let us do one sum. One minute. Let us do one sum in the practice questions. The first sum. This is your book question only, but a very interesting question. G Limited acquired a machine on 1st April 20x0 for rupees 7 crores that had an estimated useful life of 7 years. The machine is depreciated on straight line basis and does not carry any residual value. On 1st April 20x4, the carrying amount of the machine was reassessed at 5.1 crores and the surplus arising out of revaluation was credited to revaluation reserve. So what happened? I purchased an asset for 7 crores. 7 years was the useful life. Residual value 0. So depreciation will be 7 by 7, 1 crore. 1 crore will be the depreciation. Okay. So 1 crore is the depreciation. So 1 crore will be the depreciation, and now we are on 1st April 20x4 and this asset was purchased on 1st April 20x0. That means 4 years over. So every year 1 crore depreciation would have charged. So 4 crores total depreciation. So 7 minus 4, 3 crores will be the book value or carrying amount. This 3 crores will be the book value, but revalued amount or the fair value will be 5.1 crores. Book value is 3 crores. Fair value or revalued amount is 5.1. So there is a revaluation profit of 2.1 crores which will be credited to revaluation reserve. This revaluation profit will be credited to revaluation reserve. Okay. Then let us see what happened after that. For the year ended 31st March 20x6, conditions indicating an impairment of the machine existed and the amount recoverable ascertained to be only 79 lakhs. You are required to calculate the loss on impairment of the machine and show how this loss is to be treated in the books of G Limited. G Limited had, last line very important, G Limited had followed the policy of writing down the revaluation surplus by the increased charge of depreciation resulting from revaluation. Okay, let us see how to solve this. See, after that revaluation, your revised carrying amount is 5.1 crores. Already in 7 years, 4 years over. So how many balance years we have? 3 years. So from now, depreciation will be 1.7 crores. So when did you revalue? 1st April 20x4. This impairment assessment you are doing in 31st March 20x6. That means 2 years over. So totally how much depreciation you would have charged? 3.4 crores. So 5.1 minus 3.4, 1.7 crores will be the book value of the asset. 1.7 crores will be the book value of the asset or carrying amount of the asset. And what is the recoverable amount given in the question? 79 lakhs. So book value is 1.7. Recoverable amount is 79 lakhs. So there is an impairment loss of 1.7 minus 0.79. Adana sir 0.79. 79 lakhs is 0.79 crores. So 91 lakhs will be the impairment loss. Is this clear, everybody? Sir, in the impairment loss, which what to do with this impairment loss? Here where this question becomes interesting. Gavani, before telling what to do in the question, I want to once revise one point in AS-10. What AS-10 says is, whatever revaluation reserve that you have created, you can treat that in two ways. Option 1, option 2. This revaluation reserve, AS-10 is giving us two options. AS-10 says you can either follow option 1 or option 2. We are asking AS-10, what is that option 1? AS-10 says, keep the revaluation reserve as it is. Don't touch that. Don't do anything with that revaluation reserve. Keep it as it is. At the time of disposal or at the time of sale of the asset, this revaluation reserve can be transferred to general reserve. Remember, not to P&L. It should be transferred to general reserve or P&L personal account or to retained earnings. It cannot be transferred to P&L nominal account of that year. Remember this carefully. AS-10 clearly says that you can keep the revaluation reserve as it is till the sale of the asset. Once you have sold the asset, then that revaluation reserve can be transferred to this general reserve or retained earnings or P&L personal account, not to P&L nominal. This is option 1. Option 2, what AS-10 says is, instead of keeping that revaluation reserve as it is till the sale of the asset, this revaluation reserve can be transferred to general reserve every year to the extent of excess depreciation. How much ever is the excess depreciation, to that extent, every year you can transfer from revaluation reserve to general reserve. Sir, what do you mean? See in this question itself, after revaluation, your depreciation became 5.1 by 3, 1.7 crores. Correct? If this revaluation was not there, your depreciation would have been 1 crore only. So how much is the excess depreciation because of revaluation? 0.7 crores. So what AS-10 says, from the 2.1 crores of revaluation reserve, every year 0.7 crores can be transferred to general reserve. This is what is option 2. Option 1 la what you will do, this 2.1 you will keep it as it is, and at the end of the life when you sell the asset, you will transfer the 2.1 to general reserve. But under option 2, what AS-10 says is, every year to the extent of excess depreciation, you can transfer from revaluation reserve to general reserve. So you can follow any one option, but here G Limited has clearly given that G Limited wants to follow the policy of writing down the revaluation surplus by the increased charge of depreciation. Sir, what do you mean? That means to the extent of the increase in depreciation, they want to reduce their revaluation reserve and transfer that to general reserve. So that is what G Limited is following. So G Limited enna pannirpaanga, every year from that revaluation year 0.7 crores they would have charged. 2 years over, so 1.4 crores they would have transferred from revaluation reserve. Appo 2.1 la 1.4 is gone, so we will have a balance of 0.7 crores of revaluation reserve on 31st March 2026. So now how much is our impairment loss? 91 lakhs. How much only we have revaluation reserve? 70 lakhs. So out of 91 lakhs, 70 lakhs will be adjusted against revaluation reserve. Excess 21 lakhs of impairment loss will be taken to P&L. Hope you are comfortable with this. So ensure that you know these two options properly. You would have learnt in AS-10 also, but I am definitely sure most of you would have forgotten it by now. So ensure that you go through this once. Okay. Now let us go back to our concept revision. 1 minute. Yeah. Okay. So now for an individual asset, we know how to calculate impairment loss, and we also know how to reverse. Guys, in that reversal, that one point, after reversal of impairment loss, the carrying amount of the asset should not go beyond the value had there been no impairment loss. That one point alone, ensure you are very, very thorough with that. Okay. Next. Now see, actually, for calculating impairment for a single asset, we should calculate for that asset value in use as well as NSP. Only if you know value in use and NSP, you can estimate recoverable amount. That recoverable amount then only can be compared with carrying amount. But in most of the companies or in most of the businesses, practically, one single asset cannot generate all the cash. All the assets work together to generate cash. Now, if you would have observed in the class that you were sitting itself, can you tell only my chair was generating cash, or only camera is generating cash, or only board is generating cash, or only marker is generating cash? We cannot say like that. All these assets are working together as a unit to generate cash for the business. So there only comes a concept called as cash generating unit. Practically, one single asset cannot generate all the cash flows. So we will take group of assets. Remember, it is the smallest group of assets. It is the smallest group of assets that can generate cash inflows independently from other assets. That means this group will be able to generate cash inflows on its own without being dependent on any other asset outside the group. That group is called as CGU, cash generating unit. See, this individual asset and all will be mostly questions for exam purposes. But practically, the concept which is more relevant is our CGU. Okay, so CG is single asset or group of assets? It's the group of assets. If anybody asks you, you should tell it is the smallest group of assets. Okay, now in case of CGU, how to test the impairment loss? Okay, what AS-28 says is, inside CGU there will be multiple assets. Each asset will have carrying amount. Take a total of that carrying amount. That total will be your CGU ka carrying amount. For the CGU, we have to estimate value in use and NSP of the CGU. In these two, whichever is higher, that will be recoverable amount. That recoverable amount will be compared with this total carrying amount. If recoverable amount is less and carrying amount is more, then for the CGU, there is impairment loss. There is impairment loss. Now guys, wait. This impairment loss is for the CGU, is for the group of assets. Now what you should do, this impairment loss needs to be allocated across multiple assets that are there inside CGU. Whatever impairment loss that you have calculated is for the CGU as a whole, inside which there are multiple assets. So this impairment loss should be allocated to that multiple assets. Sir, how to allocate that, sir? That multiple assets have a carrying amount. In the ratio of that carrying amount, you have to allocate this impairment loss. But before that, you have to remember one very, very important point. If inside this CGU, there is goodwill. In the CGU kulla, there are multiple assets. In that, if one of the assets is, goodwill, then the standard says, first you have to hit that goodwill. First on the goodwill addition. Okay, so first you have to make that goodwill zero. Because I told you many times in the class itself, accountancy slightly they don't like goodwill. They want to reduce goodwill as much as possible. So accountancy says, if there is any impairment loss for a CGU, first that impairment loss should be charged against goodwill. If there is any extra loss even after making goodwill zero, that extra impairment loss will be allocated across the remaining assets in the ratio of carrying amounts. Ensure you remember this point very clearly. Okay. Ana inga ore point enna solrana, AS-28. Now you will allocate that impairment loss to multiple assets, asset 1, asset 2, asset 3. and then you will reduce their carrying amounts by this impairment loss. That time what AS-28 says, the reduction, the revised carrying amount of the individual assets, after charging impairment loss, should not go below the highest of, remember, should not go below the highest of that assets value news, NSP and 0. இது மூணுத்துல take whichever is the highest. அவன் என்ன சொல்றான், இதுல highest ஒரு amount இருக்கா, there will be a value which is highest. This carrying amount should not go below that highest value. If it is going below that highest value, that extra loss you have to reverse from this A1 and allocate to A2, A3. Then again for A2, A3, compare whichever is highest in this. If there also there is excess, allocate that to A3. Remember, after allocating impairment loss, the carrying amount of the individual asset should not go below the highest of value news of that asset, NSP of that asset, or 0. If it is going below the highest of these three amounts, that excess impairment loss should be taken to other assets and it should be charged to other assets in the ratio of their carrying amounts. I hope you are very clear with this. So first goodwill, CGU la goodwill, first make goodwill 0. If there is still extra loss, that extra loss should be allocated to the other assets in the ratio of their carrying amounts. Okay, so keep this point very, very clear. Sir, for CGU also can I reverse impairment loss? Yes. For CG also, if there are indicators of reversal of impairment, you can reverse the impairment loss. But one thing what standard says, if you are going to reverse, first reverse impairment loss for other assets. See how accountancy is thinking. When they want to charge impairment loss, first they will charge against goodwill. But when they want to reverse, they are telling first reverse for assets other than goodwill. So pavam goodwill. Okay, if there is impairment loss, first you will charge it to that. If there is reversal, first you will increase for others. Okay, so the reversal of impairment loss should first happen for other than goodwill. That reversal of impairment loss should be allocated to assets other than goodwill in the ratio of their carrying amount. So whatever is the carrying amount of that other assets, in that ratio you have to split it and increase it for other assets. Remember, first you should not reverse it for goodwill, first you have to reverse it for other than goodwill. For other than goodwill, you reverse it in the ratio of their carrying amounts and increase it. Okay, so assume you have A1, A2, A3. In the ratio of these carrying amounts, you split it. Okay, and you split it in the ratio of these carrying amounts, and then you will increase that reversal. Okay, now again here AS-28 says, okay, what you are telling, whatever is the impairment loss reversal, allocate it across these assets other than goodwill. Don't worry, we'll be doing one sum after this. Allocate that reversal of impairment loss across these assets other than goodwill. Increase the carrying amount of that individual assets. Here AS-28 says, after reversing the impairment loss for each individual asset, the revised carrying amount should not go more than or should not go above the lower of. Dey angenna sonna, for charging impairment loss he told it should not go below the highest of. Inga reversal kenna solran, it should not go above the lower of rendu amount, recoverable amount of that individual asset, and 2, carrying amount had there been no impairment. In these two amounts, whichever is lower, take that amount. It should not go beyond that amount. after reversal, the carrying amount should not go beyond that amount. If it is going beyond that, that excess reversal should be removed from A1 and allocated to A2 and A3. Remember this. See, this has not been tested in any of the sums in any past questions. In fact, in past question, he has not even asked till now any question on CGU. Mostly the testing has been on individual assets. So ensure you just go through these things as theory points, so that if there is any question that comes, you should be able to answer. So for charging impairment loss, first hit goodwill, then you have to allocate it across other assets. Extra loss should be allocated across other assets in the ratio of their carrying amounts, Then after charging the impairment loss, the revised carrying amount should not go below the highest of value in use of that asset, NSP of that asset, and 0. Adhe mari, at the time of reversal of impairment loss, first you should not reverse for goodwill, you should reverse for assets other than goodwill. Then after that, if there is still any excess reversal, remember first reversal should happen to other assets in the ratio of their carrying amounts. Then reverse பண்ணும்போது அந்த individual assets value will increase. அங்க என்ன சொல்றா AS-28, that value should not go above the lower of recoverable amount of that asset and carrying amount had there been no impairment loss. Remember this, sir. But what if I want to reverse for goodwill? Can I reverse, sir? AS-28 says you can reverse, but I want you to satisfy two conditions. First, charge panna time lo goodwill ku charge pannunta. Okay, we charged fully to goodwill. At the time of reversal, for other assets, no conditions. For goodwill, if you want to reverse, AS-28 says you have to satisfy two more conditions. We are telling, okay, AS-28, tell what are those two conditions. Earlier, the impairment should have been caused due to a specific external event, and now the effect of that external event should have been reversed. என்ன சொல்றான், முன்னாடி ஏதோ எக்ஸ்டர்னல் ஈவென்ட்னால இந்த இம்பேர்மெண்ட் நடந்திருக்கணுமா, இப்போ அந்த எக்ஸ்டர்னல் ஈவென்ட்டோட எஃபெக்ட் ரிவர்ஸ் ஆயிருக்கணுமா? If you remember, we would have discussed in class, I would have taken example of Sangeeta Hotel. I would have taken example of some XYZ hotel. In XYZ hotel, when they were eating in sambar, there was one rat. Because of that, people got scared and nobody started coming from next day. So all the assets were impaired. Goodwill also was impaired. Then again, new management was appointed. Now they have cleaned the entire kitchen. Now they started doing positive publicity. Again, people started trusting this XYZ hotel. Again, they started coming. Now, earlier, goodwill impairment was caused due to that specific rat event. Now, you have been successfully able to reverse the effect of that event. So, if these two conditions have been satisfied, you can go ahead and reverse the impairment loss for goodwill. Otherwise, you cannot reverse. Okay, sir, enough of theory, sir. Yes, let us go to one sum. Okay. Question number 3. Himalaya Limited, which is in a business of manufacturing and export of its product, sometimes back in 2014, the government put restriction on export of goods exported by Himalaya. And due to that restriction, Himalaya impaired its assets. Himalaya Limited acquired identifiable assets worth rupees 4,000 lakhs for rupees 6,000 lakhs at the end of the year 2010. The difference is treated as goodwill. Okay, see what happened. This Himalaya is in the business of exporting some products. Okay, suddenly what happened in 1 year, that is in 2014, government had put a restriction on export. So because of that, now Himalaya Limited is no longer able to export its products. Because of that, its revenue will fall. There will be a negative impact on its assets, which is an indicator of impairment. We have to test it for impairment. And what happened? All Himalaya Limited assets were acquired in an amalgamation. So totally in amalgamation, what we will do, we will calculate PC. That PC that they paid is 6,000 lakhs. And for the 6,000 lakhs, they acquired assets worth 4,000 lakhs. AS-14, PC will be compared with NATO. Here PC is 6,000. NATO that they acquired is 4,000. So difference of 2,000 will be goodwill. So 2,000 they would have recorded as goodwill. The difference is treated as goodwill. The useful life of this identifiable assets, this. In the 4,000 lakhs assets or a useful life is 15 years and depreciate on straight line basis. When government put restriction at the end of 2014, the company recognized the impairment loss by determining the recoverable amount as 2720. So 2014 the recoverable amount was calculated as 2720 lakhs. In 2016, the government lifted the restriction imposed on the export, and due to its favorable change, Himalaya Limited re-estimated the recoverable amount at 3420 lakhs. Required, calculate and allocate the impairment loss, and also you should calculate the reversal. Okay, let's get started with this question. In 2010, these assets were acquired. Okay, so what has happened is 4,000 lakhs assets were acquired. 15 years useful life. Now when this restriction was put, it was put in 2014. So 4 years would have got over. So 4,000 divided by 15 into 4. Let me see how much is it. Let me get a calculator. So 1067 is the depreciation. Okay. 4,000 minus 1067. 2933 will be the carrying amount. Okay. So 2933 will be the carrying amount of the remaining assets. Now this goodwill 2000 lakhs. Idoda useful life kudukliya sir question la. They have not mentioned what is the useful life of this 2000 lakhs sir. See, they need not mention that. What is told in AS-14 is, AS-14 says goodwill recognized at the time of amalgamation should be depreciated within 5 years. Should be depreciated within 5 years. So goodwill acquired in an amalgamation should be depreciated in 5 years. This is mentioned in AS-14 itself. So they will not give you in the question. So please ensure you have this knowledge. Goodwill recognized at the time of amalgamation will be amortized over a period of 5 years. Over a period of 5 years. Okay. So 5 years we have to depreciate this. Apo 2000 lakhs divided by 5 will be 400 lakhs. Will be 400 lakhs. So how many years over? 4 years over. So 400 into 4. 1600 will be the accumulated depreciation. So 2000 minus 1600, carrying amount before impairment will be 400, and for the other assets it will be 2933. Total carrying amount of this CGU will be 333. This is the total carrying amount. How much is the recoverable amount? 2720. Appo remaining amount will be 333 minus 2720. 613 will be the impairment loss. Sir, now what we should do? I told you inside CGU, if there is a goodwill, first you should hit goodwill. So inside the 6, out of the 613, 400 will be charged to goodwill. Remaining 213 will be charged to other assets. Okay. So, this goodwill will become 400 minus 400, 0. And for other assets, this 2933 minus 213, 2720 will become the revised carrying amount of the other assets. Okay, va? So first one in the impairment loss allocate pannun purinjicha. Now let us see how to do with the reversal. In 2016 that ban on export of goods was removed. So since that ban was removed, now we can go ahead and actually reverse, because this is a positive sign. So there is indicator of reversal of impairment loss. We can try to reverse. Let us see what will happen. So now after charging that impairment loss, 2720 was the revised carrying amount. 4 years over. Up remaining we have 11 years. 11 years. Remaining 11 years we have. So per year we will charge a depreciation of 247. And how many years over? 2 years over. So 2720, totally 15 years. In the 15 years, 4 years over. So in 4 years, we would have depreciated already and we have charged impairment also. So 2720 will be the carrying amount after impairment. And now we have to use this for subsequent depreciation of 2 years. Subsequent depreciation of 2 years. So see now what will happen. 2720 by 11. Every year it will be 247 will be the depreciation. 2 years. 247 into 2. 494 depreciation. Appo 2720 minus 494. 2226 will be the carrying amount before reversal. Okay. Goodwill already 0 ache. Plus 0. Total will be 2226. Okay. And now when you estimate what is the recoverable amount? 3420. Sir, 2226 is the carrying amount, sir. Recoverable amount is 3420, sir. So appadi I can reverse entire thing. No, wait. What AS-28 says, at the time of reversal of impairment loss, carrying amount should not go beyond the value had there been no impairment loss. Ippo impairment loss illana, what would have happened? In the assets number 4,000 lakhs ka vaanginoma, we purchased for 4,000 lakhs, 15 years, and this asset was purchased 6 years back in 2010. So into 6, how much will be the depreciation? 4,000 into 6 divided by 15. Okay, so 1,600 will be the depreciation. So 4,000 minus 1,600, 2,400 will be the carrying amount had there been no impairment. Appo from 2226, maximum we can take it only to 2,400. It cannot go beyond that. So 2,400 minus 2226, 174 is the amount of impairment loss that can be reversed. Is the amount of impairment loss that can be reversed. Able to understand? Okay, so please ensure that you are very clear with this. Carrying amount after reversal should not go beyond the value had there been no impairment loss. So only 174 we can reverse for other assets. Sir, what about goodwill, sir? Goodwill, Gavani, to reverse the impairment loss relating to goodwill, 2 conditions should be satisfied. Correct? What are those 2 conditions? First condition, the earlier impairment loss should have been caused due to an external event. Sir, why was this impairment caused? Because of government putting ban. So yes, it was caused due to an external event. Now that external events effect should have been reversed. Yes, sir, government has reversed. So we can reverse the impairment loss for goodwill also, sir. So that 400 will reverse it, sir. Wait. After reversal of impairment loss, the carrying amount of the asset should not be more than had there been no impairment loss. Correct? In the impairment loss illana, what would have happened? This goodwill was recorded in 2010 and goodwill will be amortized in how many years? 5 years. Appo impairment illana kuda in 2015 itself goodwill will become 0. Appo this after reversal goodwill cannot increase beyond 0. Already it is 0. So for goodwill, no impairment loss can be reversed. Okay. So that one point is very important. That one point is after reversal of impairment loss, the carrying amount should not be more than the value had there been no impairment loss. So here goodwill, even though there is no impairment loss, it would have been 0 itself by 2016. 2015 it would have become 0. So now also it is 0. Nothing can be reversed in respect of goodwill. Guys, ensure you practice this sum. This will will help in revising both charging impairment loss also and also reversal of impairment loss. Okay. Okay. Before going to the next question, which is our last question, I want to discuss about something called as corporate assets. So what do you mean by this corporate assets? AS-28 says corporate assets are assets. Corporate assets are assets that contribute to the cash flows of multiple CGUs. Corporate assets are assets that contribute to the cash flows of multiple CGUs. They don't contribute to one single CGU. Sir, any example? Best example is headquarters building. Sir, in the English, sir, give us some example. Okay. Assume in our academy, there are 3 buildings. AGR, BATA, Philites. Assume our academy is structured in such a way that AGR building is the head office where all the decisions will be taken, where sir and the management will be sitting. They will take all the decisions. BATA building, assume BATA building is only for CA classes. Philites building is for CMA and CS classes. Assume this is how they have structured these buildings. Now what will happen? This Philites building is a separate CGU because they can generate separate cash inflows from CMA CS course. BATA building is a separate cash generating unit which will generate cash from CA course. Now the headquarters AGR building is actually supporting both Philites building and also BATA building. So actually headquarters is contributing to both BATA as well as Philites. That AGR head office building will be called as corporate asset. Corporate asset irukkanumna they should contribute to the cash flows of more than one CGU, then only it can be a corporate asset. If it is contributing to the cash flows of only one CGU, then it cannot be a corporate asset. Remember this carefully. Sir, in the corporate assets irunda, what we should do for impairment test, sir? Okay. See what AS-28 says. Now whatever we are going to discuss is applicable both to goodwill as well as corporate assets. Okay, wow. AS-28 says whenever you have like this goodwill and corporate asset, first thing, see if you are able to allocate these assets to the individual CGUs. Assume number company we have 3 CGUs. Okay, so assume we have 3 CGUs. Now these goodwill and corporate assets, AS-28 says, first thing, see whether it is allocable to the individual CGUs. Is it possible to do a reasonable allocation? Yes, sir, there is some possibility. We can do in a ratio, we can do allocation. Then very, very good. Allocate this goodwill and corporate asset to the CGUs. Add it to the carrying amount of the CGUs. And then for the total carrying amount, which includes a proportion of that goodwill and corporate asset, for that you can do impairment test. Okay. At the individual CGU level itself, which will include that allocated corporate asset and allocated goodwill. This is called as bottom-up test. Okay. Suppose the real issue comes where this goodwill and corporate asset are not allocable to the individual CGUs. You are not able to allocate them to CGU1, CGU2, CGU3. You are not able to find out any reasonable basis for allocation. Then the real problem comes. That time what AS-28 says, you are not able to allocate, or no sir, we are not able to allocate. Then what you do? First, for these individual CGUs, without including goodwill and corporate asset, do impairment test. That is called as bottom-up test. Whenever you do impairment at individual CGU level, that is called as bottom-up. So first, without allocating, do the impairment testing for individual CGUs. CGU1, CGU2, CGU3. Angedach impairment loss vanda, charge it to that CGUs. Then what you should do? Add all these CGUs add this goodwill also and corporate asset also and make a bigger CGU. Don't worry, we'll also be discussing this through a sum in question 4. Okay, what we will do, since these are not allocable, we will add all the 3 CGUs. To that we will add goodwill also, to that we will add corporate asset also, and we will make a larger CGU. For that larger CGU, which includes CGU1, CGU2, CGU3, it also includes goodwill, it also includes corporate asset. For all that bigger CGU, we will separately do impairment test. This is called as top-down test. Appa sir, individual CGU, if you do impairment test, that is called as bottom-up. If you combine all these CGUs and for the larger CGU, if you do that impairment test, that is called as top-down test. Okay, guys, this is applicable both for goodwill and corporate asset. But remember, there is one small difference between goodwill and corporate asset. What is the difference, sir? If a CGU contains goodwill, whatever impairment loss is there, first that impairment loss will be charged to goodwill. But corporate asset is not like that. Even if a CGU has corporate asset, the total impairment loss will be allocated across all the assets in their proportion of carrying amount, including corporate asset. Okay, so see what happens is, if inside CGU, if goodwill is there, whatever impairment loss is coming, first we will hit that goodwill, then only extra loss we will allocate to other assets in the ratio of their carrying amount. But when corporate asset is there, we need not hit that corporate asset first. We will allocate this impairment loss to all the assets, including corporate asset, in the ratio of their carrying amounts. This is the only place where there is a difference between goodwill and corporate asset. Remember this. Now with this background, let us do question 4. M Limited has 3 cash generating units, A, B and C. Due to adverse changes in the technological environment, M Limited conducted impairment test of each of its CGUs. On 31st March 2018, the carrying amounts of A, B and C were 100, 150 and 200 lakhs respectively. The operations are conducted from a headquarter. This is a corporate asset. The carrying amount of the headquarter asset is 200 lakhs. In the headquarter asset 200 lakhs, 2 things are there. One is headquarter building of 150 lakhs and there is another research center of 50 lakhs. See, inside this headquarter of 200 lakhs, we have one building of 150 and we have research center of 50. Either total the 200. Okay, so we have 2 corporate assets here. One is building 150, one more is research center 50. The relative carrying amounts of the cash generating units are a reasonable indication of the proportion of headquarter building devoted to each cash generating unit. The carrying amount of research center cannot be allocated. Appo, this building 150. This is allocable. This can be allocated. This one is not allocable. This is not allocable to the individual cash generating units. Following is the remaining useful life. For A it is 10, for B it is 20, for C it is 20, for headquarters also it is 20 years. The headquarter assets are depreciated on a straight line basis. The recoverable amount of each CGU is based on its value in use, since net selling price cannot be calculated. If net selling price cannot be calculated, value in use itself will be taken as recoverable amount. Therefore, value in use is equal to A 199, B 164, C 271. For the company as a whole, it is 720. Okay. Now we have to calculate the impairment loss and show how to allocate that. Okay. Let's do this. Okay, so கவனி, இப்போ இது எப்படி பண்ணோம் நானி, A ஓட carrying amount 100 lakhs, B ஓட carrying amount 150 lakhs. C oda carrying amount is 200 lakhs. Okay, and useful life of A is 10, B is 20, C is 20. Okay, sir, where is it given, sir? Yahan dekho, here it is given. Ayyo. Okay, now this headquarter building is 150 lakhs, that we have to split it across A, B and C in the ratio of, listen, in the ratio of carrying amount of each individual CGU into useful life. That means 100 into 10,000, 150 into 20, 3,000, 200 into 20, 4,000. We have to split this 150 in the ratio of this 1000 is to 3000 is to 4000, which is 1 is to 3 is to 4. So நம்ம என்ன பண்ணோம், 150 in the 1 is to 3 is to 4 ratio we have to split. So 150 divided by 8 will be 18.75. So what will happen, to A you will give 18.75, to B you will give 18.75 into 3, 56.25. To C you will give 4 into 18.75, 75 you will give to C. This is how you will allocate. So what will happen now, A oda carrying amount will be already 100 lakhs, we have other assets. Now this 18.75 also will get added. So it will be total 118.75. This is the total carrying amount. Now what is the recoverable amount, sir? Recoverable amount is 199. So carrying amount 118.75, recoverable amount is 199. So carrying amount is less than recoverable amount. So there is no impairment loss for A. Same way we will see for B. B already we have 150 lakhs worth assets, and then we have 56.25. Now what is the total carrying amount? 206.25. This is the total carrying amount. Let us see what is the recoverable amount. Recoverable amount is 164. Appo carrying amount is 206. Recoverable amount is 164. So there is an impairment loss of 206.25 minus 164, 42.25. 42.25. Sir, what should we do with this 42.25, sir? Gavani, in the 206 kulla, inside this 206, we have 150 lakhs other assets. We have 56.25 lakhs corporate asset, correct? In this ratio, we have to split this total impairment loss of 42.5 and give it to corporate asset and other assets. Remember, this 42.5 impairment loss should be allocated to other assets also and corporate asset also in the ratio of their carrying amounts, and it needs to be split. Able to understand? Or split button. So 150 is to 56.25 ratio. I have to split this 42.25. Number but divided by 206.25 into 150. So inside this 42.25, 31 will go to this. I am just rounding off. Remaining 11.25 will go to this. Appa enna guna, B oda other assets will be 150 minus 31, 119. And this corporate asset which was allocated to B will be 56.25 minus 11.25, 45. I hope this is very clear. Okay. Next C ku polama. So idu naam vechko, idu oru dabba podra, idu naam vechko, inda oru dabba naam vechko. Okay. Next let us go to C. Okay. C ku carrying amount of other assets is 200. And how much we have allocated? 75. So 200 plus 75 lakhs, 275 lakhs. And the recoverable amount is how much? 271. Appa, how much is the impairment loss? 4 lakhs. Now this 4 lakhs also what you should do, you have to split in the ratio of 200 and 75. Inside C we have other assets 200 and corporate assets 75. So in the ratio of this 200 is to 75, in the 4 lakhs we have to split. So 2.9 will go to this, 1.1 will go to this. Appa enna aidona, C oda other assets will be 2.93 akitra minus 3 197, and the corporate asset portion will be 75 minus 1 74. So this is how you have to do, you have to allocate the corporate asset and do the impairment testing at individual CGU level. Okay va? Ippo gamani, there is one more corporate asset which you cannot allocate, which is our research center. Appa adukkaga what we should do? We should do the top down test. Sir, everybody sir, top down test gamani. Now we have A va. A was there any impairment? No, because A, if you see, I told you, remember this dabba, A carrying amount was less than recoverable amount, so there is no impairment loss for A. So A ade 100 vandruma other assets. Okay. B we charged impairment loss. After impairment loss how much? 119 other assets mattu edukra first. Seek after charging impairment loss 197. So appo how much is the total revised carrying amount? 100 plus 119 plus 197. So total is 416 lakhs. This is other assets. Corporate asset building. அதுக்கு என்னாச்சுன்னா கவனியே, inside A or 18.75 போச்சா, for that no impairment ah, so take that as it is 18.75. inside B or portion went ah, for that we charged impairment loss ah, and we calculated what is the revised value after impairment loss 45 ah, take that. Plus 45, and inside C also our portion went ah, for that also we charged impairment loss ah, that became 74 ah. So 18.75 plus 45 plus 74, totally it will be 137.75. This is the building. And now research center is how much given in the question as 50 lakhs. So total carrying amount will now be 416 plus 50 plus 137.75. This 603.75 will be the carrying amount of the larger CGU. Now we are doing top down. This will be compared with recoverable amount of the company as a whole, which is 720. Since recoverable amount is more, carrying amount is less, after this there is no impairment loss. There is no impairment loss. Is this clear everybody? So sir enna solringa, if a corporate asset is allocable, allocate it to the individual CGUs, add that allocation to that CGU, do the impairment testing. If any impairment loss comes, allocate it to all the assets including the corporate asset. After this, if any corporate asset is not allocable, take the revised carrying amount of the CGUs after charging impairment loss, take the revised amount of that corporate asset after charging impairment loss. Now to that add this asset for which you are not able to allocate, that will be the bigger CGU, compare that with the record amount of that bigger CGU. If that record amount is again less, there will again be impairment loss, which will again be allocated across all the assets. If that bigger record amount is more, then there won't be any further impairment loss. Clear? Hope you are very, very clear with this. Guys, in the standard for revision, ensure you are first very clear with how to charge impairment loss, how to reverse impairment loss for an individual asset. In that very important point is, after reversal of impairment loss, carrying amount of the individual asset should not go beyond the carrying amount had there been no impairment loss. That point is very important. So ensure you do that. And on the revaluation reserve option 1, option 2, which is there in the G limited question, ensure you practice that also. Then come to CGU concept. CGU concept la, remember, if you are charging impairment loss, first charge against goodwill. If you are reversing, first you are reverse for other assets. Goodwill you can reverse only if the two specific conditions are satisfied. And then you have to check if goodwill and corporate asset are allocable. If they are allocable, only bottom up test. If they are not allocable, you should do the bottom up test also. You should do the top down test also. And then remember this one point, AS-14 goodwill. Goodwill recognized at the time of amalgamation should be amortized in a period of 5 years. Should be amortized in a period of 5 years. Remember this point very clearly, and do this question 3 and question 4 for sure. This will help in revising most of the concepts. With this, you will have strong hold on this standard AS-28 impairment of assets. Many feel the standard is quite difficult, but if you are very thorough with these points which I have given you in notes, and if you are very thorough with these questions, you can definitely answer any question in the exam. Thank you so much. I'll come back with another revision video. Thank you.